All right, so are you ready to dive into the world of steel wire manufacturing?
I know I am.
We've got a fascinating deep dive ahead of us today looking at Bansal Wire Industries.
Sounds intriguing.
Our listener has sent us a ton of material on
Oh,
them.
wow.
We've got their investor presentation, their official announcement to the stock exchanges,
Hmm.
and even some potential podcast
Oh,
questions.
this is going to be a good one.
And yeah, just glancing through it already, I'm seeing some interesting stuff.
Like what?
Well, there's a lot of talk about their recent IPO, a big push for backward integration.
Interesting.
And get this, a five-pronged growth strategy.
Wow, they're not messing around.
It sounds like Bansal Wire has some pretty ambitious plans.
Yeah, definitely ambitious. And with this mix of sources, we should be able to get a really comprehensive view of their performance.
For sure. So before we get into the numbers, let's set the stage a little bit.
Okay.
Who is Bansal Wire Industries?
Okay.
What's their position in the steel wire landscape?
Well, their investor presentation makes it pretty clear that they're a major player. We're talking about the second largest steel wire manufacturer in all of India by volume.
Wow, that's huge.
And not only that, but they're the absolute largest when it comes to stainless steel wire.
Okay, so they're big, but I'm guessing they're not just making one type of wire.
Right. They actually boast over 3,000 SKUs.
3,000.
3,000. That's got to be more than anyone else in India.
That's incredible. It sounds like they're catering to a really wide range of industries.
Exactly. And they're not just focused on the domestic market either. They're serving over 5,000 customers across a variety of industries
Wow.
and exporting to more than 50 countries.
Okay, so they're big, they're diverse, but what's the overall message that Bansal Wire is sending out with these Q2 results?
Well, if you look at the MD and CEO's message, it's clear that they're feeling very confident.
Confident. How?
They're riding high on the success of their recent IPO, and they're really celebrating their strong Q2 performance.
Okay, so they're happy with how things are going.
Yeah, and beyond just their own success, they seem genuinely optimistic about India's economic growth and how they're positioned to benefit from it.
Interesting. So they're not just talking about their own company, but also the bigger picture.
Exactly. They see themselves as part of this larger growth story.
That's a good sign. All right, well, let's get to the heart of it, the financials. I know that's what our listeners are really interested in.
Of course.
So what are the key figures from the investor presentation?
Well, the numbers definitely paint a compelling story. Their revenue is up a significant 36.8% year over year,
Okay.
reaching $8,254.5 million in Q2 FY25.
Wow, that's a big jump. So is that just because steel prices have gone up?
That's a great question, and it's something they address in their investor presentation.
Okay.
They've been really focused on increasing sales volume while keeping costs under control.
So it's not just about higher prices, they're actually selling a lot more product.
Exactly, and that combination is a recipe for serious profit growth.
Okay, so let's talk about those profits. How impressive are we talking?
Hold on to your hat, because their profit after tax, or PP, has absolutely skyrocketed.
Skyrocketed. How much are we talking?
It's a 120.8% jump year over year.
120%.
Over double their profit.
Wow, that's incredible. So it sounds like this cost control strategy is really paying off, but what specific things are they doing to keep those costs down?
Well, there are a few key initiatives highlighted in the investor presentation.
Like what?
For starters, that they just completed their IPO, which is a huge milestone.
Right, going public, that must have given them a lot of flexibility.
Exactly. It not only raises their public profile, but it also gives them a fresh injection of capital.
And I'm guessing they're already putting that capital to work.
Absolutely. They're making strategic acquisitions, like buying the remaining stake in BSPL, one of their subsidiaries.
So they're consolidating their operations.
Right, bringing everything under one roof.
Okay. But I'm also curious about this backward integration strategy they keep mentioning. What's that all about?
That's a really interesting part of their plan. Basically, they're creating a new subsidiary that will focus on securing their supply chain.
So instead of relying on outside suppliers, they're going to be doing more in-house.
Exactly. They want to control more of the raw materials and production processes.
That makes, I mean, it could really boost their profit margins if they can pull it off.
Right. It's all about reducing their reliance on external factors and having more control over their own destiny.
So it's like they're building a steel wire empire from the ground up.
I like that analogy.
Yeah.
It really captures their ambition to control every stage of the process.
And this backward integration strategy is just one part of a larger growth strategy, right?
They've got a five-pronged approach that's targeting expansion in almost every direction.
Five-pronged.
Five-pronged.
Okay, I'm all ears. Let's break it down.
All right. So the first prong is all about leveraging their globally accredited product portfolio to boost exports.
Okay, so they're looking to expand their international presence even further.
Exactly. They already have a strong global reach, but they see even more potential out there.
Makes sense. Go where the growth is. What's next?
All right, prong number 2 is all about introducing higher margin products.
Higher margins, so that means more profit per unit sold.
Exactly. And they're specifically targeting booming sectors like automotive and infrastructure.
Okay, so tapping into those high growth areas.
Exactly. They're thinking ahead, anticipating where the demand is going to be.
Smart. Okay, what else is on the list?
All right, here's where things get a little unexpected.
Oh, I like unexpected.
They're planning on entering the B2C segment,
The B2C segment.
business to consumer.
Whoa, hold on. I thought they were a B2B company.
They are, but they're looking to diversify.
So instead of supplying industrial giants, they're going to be selling directly to consumers.
Exactly. They're going to be focusing on agricultural products.
That is a big shift. I mean, going from B2B to B2C is a whole different ballgame.
It is. It's a bold move, but it could be a game changer if they can pull it off.
So why are they doing it?
Well, think about the potential of mootness. India has a massive agricultural sector,
True.
and Bansal Wire could provide everything from fencing to irrigation systems directly to farmers.
So it's a huge untapped market for them.
Exactly.
Yeah.
And it aligns with this larger trend we're seeing of Indian companies diversifying their revenue streams.
Okay, so it's about spreading the risk and finding new avenues for growth.
Precisely.
Yeah.
But let's be honest, going from B2B to B2C is not going to be easy.
No, it's a whole different set of challenges.
Exactly. They're going to have to build brand awareness among consumers who may not even know Bansal Wire exists.
Right. And they'll need a whole new distribution network to reach individual buyers.
It's a big undertaking.
Yeah.
But if they could do it, the rewards could be huge.
It's like they're this industrial powerhouse suddenly learning to dance with farmers.
That's a great way to put it.
Yeah.
Okay, so we've got this B2C play. What else is in their 5-pronged plan? Well, prongs 4 and 5 are a bit more straightforward. They're ramping up production at their Dadri plant, which is already the largest steel wire plant in India.
So bigger plant, more output, more market share.
Exactly. It's all about economies of scale.
But how will increasing production at Dadri specifically help them achieve their goals?
Think of it this way. By producing more steel wire, they can lower their cost per unit and become even more competitive on price.
Okay, so it's about efficiency and gaining a pricing advantage.
Exactly. And to support that increased production, they're also strategically expanding into new geographic markets, both domestically and internationally.
Okay, so they're not just growing bigger, they're growing smarter.
Exactly. It's
Yeah.
a pretty impressive roadmap they've laid out.
It is. But before we get too carried away with all this optimism,
Yeah.
you mentioned some potential podcast questions that our listeners sent in,
Mm-hmm.
and some of them focused on risk.
Right.
What are some of the challenges or setbacks that Bansal Wire might face?
Well, it's important to remember that no investment is completely risk-free. And one thing that stood out to me was the mention of decreased raw material prices.
Now, wait a minute. At first glance, that sounds like a good thing, right?
It can be.
Yeah.
But it also means they need to sell a lot more product to maintain the same level of revenue growth.
Okay, so their margins could be squeezed if raw material prices stay low.
Exactly.
Yeah.
What? The fact that their revenue is still up so dramatically suggests that they're managing this challenge effectively.
So they're aware of the issue, and they're taking steps to mitigate it.
Right. It's definitely something to keep an eye on, though.
Okay, so a potential pressure on margins. Anything else investors should be watching out for?
Well, there's always the broader economic context to consider.
Right. The global economy can be unpredictable.
Exactly. And a downturn could impact demand for steel wire across multiple sectors.
So that's something that's outside of their control.
To a certain extent, yes. But from what I've seen, Bansal Wire seems to be well-positioned to navigate these uncertainties.
How so?
They've got a diverse product portfolio, a strong international presence, and a management team that appears to be very strategic and forward-thinking.
So they're diversified, they're global, and they've got a good team in place. That's reassuring.
Okay.
So some external factors to keep in mind. But overall, it sounds like you're pretty impressed with Bansal Wire.
I am. They're a fascinating company.
What stands out to you the most from all of this information?
You know what fascinates me the most is the contrast.
The contrast between what?
On the one hand, you have this established industrial giant that's been operating for decades.
Right, a pillar of the steel wire industry.
Exactly. And on the other hand, they're not afraid to shake things up and take risks.
You're talking about that B2C move.
Exactly. That decision tells you a lot about their willingness to adapt and innovate.
It's not just about sticking to what they know.
Right.
Yeah.
It's about identifying new opportunities and having the courage to go after them.
It's like they're saying, hey, we're not just a steel wire company, we're a growth company.
Exactly.
We're not afraid to push boundaries and reinvent ourselves.
I think that's a great way to sum it up, and that's what makes this deep dive so interesting.
I agree. It's not just about numbers on a page. We're getting a glimpse into the strategic thinking that's driving Bansal Wire forward.
Definitely. All right, so we've covered a lot of ground here.
We have. Let's take a step back and summarize the key takeaways for our listener.
Okay, so based on the information we've reviewed, Bansal Wire is clearly a leading player in the Indian steel wire industry. They're coming off a successful IPO and reporting strong revenue and profit growth.
And that growth is being fueled by strategic investments, a focus on cost control, and an ambitious plan to expand into new markets.
Right, and that's got investors feeling optimistic about their future prospects.
But of course, there are always risks to consider,
Of course.
like those raw material prices and the uncertainty of the global economy.
All right, and of course the challenges of entering a new market with that B2C initiative.
It's going to be fascinating to see how they navigate those challenges in the coming quarters.
For sure. This is definitely a company to watch.
Absolutely. Now, before we move on to their balance sheet, I want to turn things back over to you, our listener. What stands out to you from this conversation?
Yeah, what questions are you asking yourself?
Because as we start to dig into the financials, these are the things you'll want to keep in mind.
Right.
What's the story behind the numbers?
What's the bigger picture?
All right, so let's roll up our sleeves and get into the details of Bansal Wire's balance sheet.
Let's do it.
We've got their consolidated and standalone balance sheets right here from the investor presentation.
Perfect.
Where do we even begin with something like this?
Well, what I find really fascinating is how the balance sheet can actually tell the story of their strategic decisions.
Okay, I like that. So how does it do that?
Let's focus on their fixed assets for a moment.
Okay.
You can see in their standalone balance sheet that there's a significant jump in fixed assets from FY23 to FY24.
Okay.
And that growth continues in the first half of FY25.
So fixed assets, we're talking about things like property, plant, and equipment.
Exactly. The physical stuff they need to run their operations.
Yeah. So that increase makes sense if they're expanding production capacity and, just generally investing in growth.
Exactly. And if you look at their capital work in progress.
Capital work in progress.
Yeah. It basically represents the money they're investing in ongoing construction or upgrades.
Okay.
And you'll see a similar trend. That number skyrockets between FY23 and FY24 and keeps growing in the first half of FY25.
So they're laying the groundwork for even more expansion in the future.
Exactly.
Yeah.
They're building a foundation for the next phase of their growth.
And if we connect this back to the strategic moves we talked about earlier, it all starts to make sense.
Right.
The acquisition of BSPL, the new subsidiary for backward integration,
Yes.
It's all reflected here in these balance sheets.
Absolutely. The balance sheet isn't just about numbers. It's about translating those numbers into a narrative.
I like that. A narrative about the company's evolution.
Exactly. And this narrative isn't just about assets. It's also about how they're financing those assets.
Okay, how are they financing their growth?
Well, look at their equity.
Okay.
There's a massive increase in the first half of FY25, largely driven by the IPO.
Right, that influx of cash from going public.
Exactly. So now they've got this war chest of capital to fuel their ambitious plans.
But they're not just relying on equity, are they?
You're right. They've also got some debt on the books.
And is that a concern?
Well, if you look at both the standalone and consolidated balance sheets, you'll notice that their borrowings have also increased.
Okay, so their debt has gone up as well.
It's a pretty common strategy for companies in growth mode, using a mix of equity and debt to finance expansion.
Makes sense, as long as they can manage that debt responsibly.
Exactly. It's all about finding that sweet spot between leveraging their resources and maintaining a healthy financial position.
So are they striking that balance?
I think so. Based on their profitability indicators and interest coverage ratios, it seems like they're in a good spot.
Okay, so they're generating enough profit to comfortably cover their interest expenses.
Exactly. It suggests they're not overextended.
Okay, that's good to hear.
Overall, I'd say their balance sheet paints a pretty healthy financial picture.
So for our listener who's been diligently following along with these balance sheets,
Yes.
what's the key takeaway here?
I think the key takeaway is that Bansal Wire is in a strong financial position to execute their growth strategy.
They've got the assets, the capital, and the track record of profitability.
Exactly.
Yeah.
But it's important to remember that past performance doesn't guarantee future results.
Right. It's all about monitoring their progress and making sure they're managing their growth sustainably.
Absolutely. Well said.
This has been a really insightful deep dive into Bansal Wire Industries.
It has.
We've gone from understanding their place in the industry to analyzing their ambitious plans for the future.
And now we've even dissected their balance sheet.
It's been a fascinating journey.
It really has. And they're certainly a company to watch.
Absolutely. Now, for you, our listener, we hope this deep dive has given you the knowledge and insights you need to make informed decisions.
Yes.
Remember, this is just a snapshot in time. The story of Bansal Wire is still unfolding.
It is.
And that intriguing B2C move adds a whole new layer of complexity and possibility.
Will they succeed in this bold new venture?
Only time will tell.
One thing's for sure, it's going to be interesting to watch.
Absolutely.
It is a bold move, but when you think about it, India has a massive agricultural sector.
Yeah, that's true.
And they could provide everything from fencing to irrigation systems directly to farmers.
Right. It's a huge market that's completely untapped for them.
Exactly. And it fits into this larger trend we're seeing of Indian companies diversifying their revenue and looking beyond those traditional markets.
For sure. But going from B2B to B2C, that's a whole different ballgame, isn't it?
It is. There are totally different challenges and different customers with different expectations.
So are they really ready to make that leap?
Well, that's the million-dollar question. They're going to need to figure out how to build that brand awareness among consumers.
Yeah, because a lot of people probably don't even know Bansal Wire exists.
Exactly. And their distribution network's going to have to change too.
Right. Instead of selling to these huge corporations, they'll need to figure out how to reach those individual buyers.
It's not going to be easy, but if they can make it work, the rewards could be massive.
It's like this big, powerful industrial company suddenly trying to figure out how to connect with farmers.
It's a pretty interesting image.
Okay, so we've got this B2C play. What else is in their five-pronged plan?
Well, prongs 4 and 5 are a little more straightforward.
Yep.
They're going to be ramping up production at their Dadri plant, which is already the largest steel wire plant in all of India.
Okay, so bigger plant, more output, more market share.
It's all about economies of scale.
But how does increasing production at Dadri help them reach their goals?
Well, by producing more steel wire, they can lower their cost per unit and be even more competitive.
So it's about efficiency and driving down those costs.
Exactly. And they're also going to be strategically expanding into new markets to support that increased production.
Okay, so it's not just about growing bigger. They're being smart about it.
Exactly.
Quite.
It's a pretty impressive plan overall.
It is. But before we get too carried away, we did talk about some potential podcast questions that our listeners sent.
Right.
And some of those were about risk.
Yeah. No investment is completely risk-free.
Of course not.
Hmm.
So what are some of the challenges or setbacks that Bansal Wire might face?
Well, one thing that stood out to me was in the investor presentation where they talked about decreased raw material prices.
And at first glance, that sounds like a good thing, right?
Yeah, you would think so. Lower costs should lead to higher profits.
Right.
But it also means they have to sell significantly higher volumes just to maintain the same revenue growth.
Right. So their margins could shrink if the price of those materials stays low.
Exactly.
Yeah.
But the fact that their revenue is still up so much suggests they're managing this well.
Okay, so it's something to monitor, but it doesn't sound like a major red flag right now.
Exactly.
Okay, so we've got those raw material prices to keep an eye on. Anything else?
Well, there's always the bigger economic picture to consider.
Right.
Global economic conditions can change quickly, and that could have a huge impact on demand.
So that's something that's totally out of their control.
Pretty much.
Yeah.
But Bansal Wire seems to be in a good position to handle that uncertainty.
How so?
Well, they've got a diverse product portfolio, a strong international presence, and a management team that seems really strategic.
So they're diversified, they're global, and they've got a good team at the helm.
Exactly. Those are all good signs.
Okay, so some external factors to keep in mind, but overall, it sounds like you're pretty impressed with them.
Yeah, I am. They're a really interesting company.
What's the most interesting or surprising thing you've learned about them?
I think it's the contrast
The contrast between...
between this established company that's been around for decades and their willingness to shake things up and take risks.
Like with that B2C move.
Yeah. It shows they're not afraid to adapt and change with the times.
That's not just about doing what they've always done.
Right. It's about looking for new opportunities and being bold enough to go for them.
It's like they're saying, hey, we're not just a steel wire company. We're a growth company.
Exactly.
We're not afraid to push the boundaries.
I think that sums it up perfectly.
All right, so we've talked a lot about their strategy and their growth plans. Let's zoom out for a second and summarize the key takeaways for our listener.
Okay. So based on everything we've seen, Bansal Wire is a major player in the Indian steel wire industry.
They just had a successful IPO, and they're seeing great revenue and profit growth.
And that growth is being driven by strategic investments, a focus on keeping those costs down, and a plan to expand into new markets.
And all of that has investors feeling really good about their future.
But of course, there are always risks to consider.
Like the price of those raw materials and the always unpredictable global economy.
Right. And we can't forget about the challenges of moving into that new market with their B2C plans.
It'll be interesting to see how they handle those challenges over the next few quarters.
Definitely a company to keep your eye on.
For sure. Now, before we move on to take a closer look at their balance sheet, I want to turn things back to you, our listener.
Yes.
What are you thinking about right now?
What's standing out to you?
Because as we dive into those financials, these are the things you'll want to be considering.
Mm-hmm.
What's the story behind the numbers?
What's the bigger picture?
Okay, so we're back and ready to tackle Bansal Wire's balance sheet.
All right, let's dive in.
Now we've got both their consolidated and standalone statements right here from the investor presentation.
Perfect.
But honestly, where do we even begin with something like this?
What always fascinates me is how these numbers actually tell a story about the company's decisions.
Oh, interesting. Okay, so how does Bansal Wire's balance sheet tell their story?
Well, take a look at their fixed assets for a second.
Okay.
If you focus on the standalone statement, you can see their fixed assets jumped way up from FY23 to FY24.
Okay.
And that growth just keeps going in the first half of FY25.
Okay, so fixed assets, those are things like their property, their plants, their equipment, right?
Exactly. Yeah. All the physical stuff they need to make their product.
So it makes sense that those would increase if they're expanding production and investing in growth.
Right. And then look at their work in progress.
Okay, capital work in progress, right?
Yeah, basically that's the money they're putting into construction or upgrades that are still ongoing.
Okay.
And that number's through the roof between FY23 and FY24.
Wow.
It keeps growing in the first half of FY25 too.
So they're really preparing for a lot more growth in the future.
That's right. They're building a foundation for what comes next.
And it all ties back to the things we talked about before, right?
Mm-hmm.
The acquisition of BSPL, that new subsidiary focused on backward integration,
Uh-huh.
it's all right there in the balance sheet.
It is. The balance sheet, it's not just about these abstract numbers.
Right.
It's a way to see the company's evolution laid out in front of you.
I like that.
Yeah.
And it's not just about their assets, right?
It's also about how they're getting the money to pay for those assets.
Okay, so how is Bansal Wire financing their growth?
We'll look at their equity.
Okay.
You can see a huge increase in the first half of FY25.
And that's because of the IPO.
Yes, exactly. Going public gave them a big boost in capital.
So now they've got all this money to work with to achieve their goals.
Exactly. But they're not just relying on equity.
They're using some debt, too.
Yeah, you can see their borrowings have gone up as well on both the standalone and the consolidated statements.
Okay.
It's a really common way for companies to finance expansion.
As long as they can handle those debt payments.
Right. They've got to find that balance between leveraging their resources and staying financially healthy.
So are they managing it well?
I think so.
Yeah.
Their profitability and their interest coverage ratios all look good.
So they're making enough money to cover their interest expenses.
Right. It doesn't seem like they've taken on too much debt.
That's good to know. So for our listener who's been breaking down these balance sheets with us, what's the big takeaway here?
I think the main point is that Bansal Wire's in a really solid position to go after their goals.
They've got the assets, they've got the money, and they've got a history of being profitable.
Exactly. But we can't forget that things change.
Of course, past performance doesn't guarantee anything.
Right. They need to keep a close eye on their debt and make sure their growth is sustainable.
Okay, so monitor and manage.
Basically,
This has been a really fascinating deep dive into Bansal Wire Industries.
it really has.
We've covered so much, from their place in the market, to their financials, to their big plans for the future.
And we even dove into their balance sheet.
It's been quite a journey, and it sounds like Bansal Wire is definitely a company to watch.
They are.
Uh,
Now, for you, our listener, we hope this deep dive has given you some food for thought.
We've given you a snapshot of where Bansal Wire stands right now.
But their story's still being written.
And that move into the B2C market, that adds a whole new layer of possibility and challenge.
Will they succeed?
Well, only time will tell.
But it'll be interesting to see what happens next.
It definitely will. Thanks for joining us on this deep dive.
It's been a pleasure.